Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is June 18th, 2025, and we're diving into the latest earnings report from Smith & Wesson Brands, a leader in firearm manufacturing. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Smith & Wesson has just released their fourth quarter and full fiscal year 2025 results, and there's a lot to unpack, especially given the current economic climate and industry challenges.
Revenue and profitability overview. Let's start with the top line. Smith & Wesson reported net sales of $140.8 million for Q4, which is an 11.6% decrease from the same quarter last year. John, what are your thoughts on this decline?
The decrease in net sales is significant, reflecting broader macroeconomic pressures and a cautious consumer market. The gross margin also took a hit, dropping to 28.8% from 35.5% last year. However, the company managed to achieve a non-GAAP EPS of 20 cents, which shows some resilience in their cost management strategies.
And how did the full year numbers look?
For the full fiscal year 2025, net sales were $474.7 million, down 11.4% from the previous year. The gross margin for the year was 26.8%, indicating ongoing challenges in maintaining profitability amidst declining sales.
Operational efficiencies and future outlook. Despite the challenges, Smith & Wesson has been focusing on operational efficiencies. Can you elaborate on their strategies?
Absolutely. The company reported a non-GAAP adjusted EBITDA of $24.1 million for Q4, which is a decrease from last year, but still reflects their disciplined cost management. CEO Mark Smith highlighted their flexible manufacturing model as a key factor in mitigating some of the margin pressures.
What about their outlook for the future?
Looking ahead, the company expects similar demand levels in fiscal 2026, with ongoing economic headwinds like inflation and tariff-related costs. However, they remain optimistic about their position in the market, supported by new product offerings and a 13-cent per share quarterly dividend.
CFO Insights. John, what insights did the leadership provide in their statements?
CEO Mark Smith acknowledged the difficult quarter, citing macroeconomic and industry trends as key challenges. He emphasized their ability to offset some impacts through cost management. CFO Deana McPherson pointed out the negative impact of inflation and high interest rates, but also highlighted the success of new products in maintaining their leadership position.
It seems like they are navigating a tough environment with strategic focus.
Indeed, they are leveraging their strengths in product innovation and cost management to stay competitive despite the headwinds.
Key takeaways. To wrap up, Smith & Wesson faced a challenging fiscal year with declining sales and margins, but they managed to maintain profitability through strategic cost management and product innovation. John, any final thoughts on their investment prospects?
While the company is facing significant headwinds, their strategic initiatives and strong brand position them well for long-term success. Investors should keep an eye on how they navigate these challenges in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Smith & Wesson's performance in the comments below.